Hello everyone, and welcome back once again to LearnCity. In today's class, we are going to talk about double declining depreciation balance, the DDB depreciation balance. So we're going to use a formula now to do a simple illustration on how it works, and we're going to calculate for just 3 years. So in the course of explaining it, I want to read out the question. So and I'll write the formula on my screen for you guys to check it out. So let's write it down. The double declining balance, the DDB depreciation formula is given as a carrying value. Carrying value at the beginning of the period. DDB is given as a carrying value at the beginning of the period multiplied by open bracket 2 multiplied by straight line depreciation rate. Straight line depreciation rate. Now, this is the formula we are going to use to calculate our DDB depreciation. Now, the carrying value at the beginning of the period is the asset's initial cost minus the total accumulated depreciation up to that particular period. Now, let's get to step-by-step calculation examples. Let's consider an example to illustrate this particular depreciation we're talking about. Let's go. As I said earlier, I only did the question. I can write out on the screen. So the question goes thus. Let's suppose a company purchases a piece of machinery for 50,000 US dollar. Estimated the useful life for that particular machinery at 5 years of lifespan, and there was no salvage value. So the straight line depreciation rate will be 1/5 or 20%, or 100% divided by the useful life for the asset. So to calculate that for year one, it will be, let's go to solution. Now solution for year one. Sorry for my handwriting. To be carrying value, according to this formula now, the carrying value at the beginning of the period multiplied by 2 multiplied by straight line depreciation rate. So it will be carrying value at the year one. You know we are calculating for 3 years, so we're going to do the first year first. Carrying value at year one. At year one is in the question I said 50,000 US dollar. It's 50,000 US dollar. So to do that, we are going to apply our formula now. DDB expense. It will now be formula carrying value at the beginning of the period, which is the first one is 50,000 US dollar. You go back to the formula again. So you multiply it. You multiply it by 2 multiplied by the straight line depreciation rate, which is according to what is given in the question. According to what is given in the question, which is 20%. So you close the bracket. If you perform this simple calculation with your calculator, you multiply 50,000 US dollar multiplied by 2 multiplied by 20%. To break this down, it will be 50,000 dollar multiplied by open bracket 2 multiplied by 0.20. Because if you break this particular 20% down, it will be 0.20. That is 20 divided by 100. You will get 0.20. So if you do that, you are going to get $20,000. So current value at the end of year one. To get that one now, this $20,000 we just got in now, we are going to minus it from the initial $50,000, which is the actual value of the asset. It will now be $20,000 minus 50,000 US dollar. You are going to arrive at 30,000 US dollar. So that is for year one. That's for year one. So let's go to year two now. To calculate for year two, for you to calculate for the year two, we are going to apply this particular formula. So the same process we apply in year one, we're going to apply the same formula for year two now. To do that, we are not going to use the actual amount, which is the $50,000 in the first year. We are going to use the amount in the first year we calculated, which is how much? Okay. To calculate for the year two now, carrying value at year two is carrying value at year two will be the ending value for year one. You bring this 30,000 US dollar, okay? You bring that. So we are going to make use of this particular 30,000 US dollar. So what you just have to do is go to your formula, DDB. Now, DDB expense. You bring this 30,000 US dollar, 30,000 US dollar, open brackets, 30,000 US dollar multiplied by open brackets, multiplied by 30,000 US dollar multiplied by, going to the formula here, multiplied by open brackets, multiplied by open brackets 2 multiplied by the initial 20% we will be using. So for this year 2 now, 30,000 US dollar we use from the previous years, which is year 1, multiplied by open brackets 2 multiplied by the 20% we are given in the question. So if you press this in your calculator, 30,000 US dollar multiplied by 2 multiplied by 20%. As I explained earlier, this 20% is 0.2. You break the percentage down, it is 0.2. So if you do this simple arithmetic, what you're going to get is 12. So it is 12,000 US dollar. That is for year 2. So for you to get the actual DDB value, you have to minus this 12,000 US dollar from the actual amount, which is 30,000 US dollar minus 12,000 US dollar, like this. 30,000 US dollar. Maybe use this. Sorry, I'm making a mistake. So it will be 30,000 US dollar minus the one we just got in for our second year now, which is $12,000. What will be our answer? Our answer will be 18,000 US dollar. Our answer is 18,000 US dollar for the second year. So we did the first year. That was first year. We got 30,000 US dollar. The balance we got in first year, we carry it to second year. Are you getting me? We carry it to second year. We got what again? We got 12,000 US dollar. We now minus it from that thousand US dollar. So the ending value for this year two, we are going to carry it to third year to perform our calculation now. To calculate to perform calculation for third year is it will be for year three. So for year three, carrying value at beginning, carrying value at beginning. So is how much? $18,000 because we are using the ending balance for year two. $18,000. So it's quite simple. So you apply the formula again for this particular one, just like we do for year two. It will be um, DDB expense. Now, DDB expense. DDB expense like this, $18,000. DDB expense, $18,000 multiplied by open brackets 2 multiplied by 20%. So you close the brackets. So if you press this on your calculator now, $18,000 multiplied by 2 multiplied by 20%, you're going to get what? You're going to get 7,000. You're going to get 7,200 US dollar. 7,000 US dollar. So that's the DDB expense for the third year. For you to get the actual value now, what you just have to do is you have to minus this is equal to you have to minus the carrying value from the year two we carry to year three minus the new balance we just got for this third year now. It will be $18,000 minus $7,200. What will you get? You are going to arrive at um, 10,000. You are going to arrive at $10,800. $10,800. That's for year three. So the carrying value at year three is the carrying value at the end of year three is 18,000 minus 7,200. It gave us 10,800 US dollar, and so on. You can keep on doing this for many years, as we've already did for year one. We arrive at 5,000 US dollar. We do for year two. We arrive at $18,000. We also did for year three. We get $10,800. On your own leisure time, you can calculate for a fourth year. So that is how DDB, depreciation expense formula works. So I hope you understand one or two things from this. You can comment your thoughts in the comment section below. Thank you for watching. I hope to meet you in the next class.